All right, what is today's 75-point basis rate hike going to have as far as an impact on the opportunity zone space? So let's kind of unpack this a little bit. So basically today, the Federal Reserve increased rates again by 3/4 of a basis point. Now they're doing this to try to hedge basically their way of kind of fighting inflation. The Federal Reserve doesn't really have a whole lot of tools to be able to do that, and moving the Fed funds rate is one of those tools. Now, the Fed funds rate's important because it's going to impact a couple key things. First of all, what it's going to impact is it's going to impact for real estate purposes, for opportunity zones, your lines of credit, your HELOCs, those type of things. The reason being is because your lines of credit are actually based typically off of a prime rate, which is going to be your Fed funds rate plus typically 3%. So that's going to have an immediate impact on your prime rates for your lines of credit. Sorry, I'm driving back from an opportunity zone property right now, actually. So the second thing that it's going to have an impact on is what's called the overnight offering rate. Now, the reason why that's important is because your overnight offering rate recently replaced the LIBOR index, the London Interbank Offering Rate. Now, to think of like how this game kind of works and how all this rate movement kind of fluctuate, think of like a roller coaster. And think of a roller coaster ride with you got your cars. The front car on that roller coaster ride, the very first car that's going to go up the hill the first and also come down the hill the first, that's your Fed funds rate. And then you have a series of all the other cars that are connected to that front car going up, while the first one's at its peak, the last one's at the bottom, so it's still low, right? Well, the London Interbank Offering Rate for the longest time was the rate that was used for commercial mortgages, things like that, commercial loans, which for opportunity zones, as you know, the opportunity zone business, especially for real estate purposes, typically has debt on the deal, and that debt is in the form of a loan. So it's going to have an impact on a lot of those commercial loans because those loans are no longer based off of the LIBOR index. They're now based off the overnight offering rate. And what's very interesting is when you take a look at the correlation between the overnight offering rate and the Fed funds rate, and you look at how that movement coincides with one another, whether they're connected or disconnected. And they are virtually an identical movement for the most part. I mean, it's very, very minimal difference. The overnight offering rate very much mirrors what the federal funds rate looks like, which means that because all of these commercial mortgages are all based off of the overnight offering rate now, we're going to see the price for those commercial mortgages go up. So the cost to borrow gets higher. Now, when you run the numbers on a large scale deal and you start seeing that your cost to borrow is almost, or in some cases now, maybe even greater than the cost of equity, all right? Now the Opportunity Zone Fund comes into play for the Opportunity Zone program because the Opportunity Zone Fund is an equity instrument. So what we're seeing is a lot more movement into Opportunity Zone funds looking for increased equity positions now, potentially in a lot of these deals. So as the rates go up and the cost to borrow gets more and more expensive with time, and I don't think that this is the last time that the Feds are going to raise the Federal Reserve. I think they're going to probably do it a couple more times between now and the end of the year, raise that Federal Reserve rate. We're going to see that cost to debt get more and more and more and more expensive for these development projects, which means that they're going to be open to selling or issuing more equity, which means we're going to see a lot more involvement now of Opportunity Zone funds in a larger stake in these positions. In some cases, the Opportunity Zone Fund may even come in and end up taking down an entire project. So the project may even look at utilizing Opportunity Zone Fund strategies in developing their own Opportunity Zone Fund to go inside with the project strictly for the point of avoiding having to take debt on the deal at today's rates. So it's going to be very interesting to see how this kind of continues to play out, the impact and on this. Although the Feds raised the rate today, I don't necessarily think the impact is going to be felt today in the OZ ecosystem. I think it's going to be still a few more weeks as we begin to kind of see what that impact looks like in the opportunity zone space, especially for these projects that are going and trying to take debt that, on the deal that's out there. The opportunity zone fund vehicle is going to become a lot more attractive because it is an equity vehicle. And people are going to be looking for larger scale equity plays that are going to be a higher value add than going out and borrowing money. So something to be kind of looking forward to in the opportunity zone space for the rest of 2022. As we've already seen in the opportunity zone space so far, we've seen an increase in opportunity zone fund investing. We've seen an increase in investors investing into opportunity zone funds. We've seen an increase in business utilization of the Opportunity Zone program. So we're definitely seeing an increase in the overall utilization of the program. If you may or may not be aware, there is an Opportunity Zone Extension Act that's sitting in front of Congress right now. All indicators and hopefulness is that will get passed through between now and the end of the year. That'll have a massive impact. When that happens, we'll do an update video on that. If you're interested in opportunity zones, you want to learn more about how all this works and how you can raise money utilizing an opportunity zone fund, how you can defer capital gains, how you can increase or your position on growing your capital gain dollars tax-free by investing into opportunity zone funds. We actually put together a certified opportunity zone advisor program. It's called COZA. It's the only training program in existence on the subject of opportunity zones. Summer enrollment is currently open, so if you want to check that out, that's going to be ozadvisor.com. In the meantime, this is Dave Silliman signing off, just giving you a quick update on how today's Fed funds decision is going to have an impact in the opportunity zone ecosystem.